Welcome back to Mortgagenomics Canada. I'm your host, Marco Giello. I'm a duly licensed mortgage broker in British Columbia and Alberta, born and raised in Calgary, currently living in North Vancouver. If you're from either of these provinces and require any mortgage-related services, please do not hesitate to contact me. Call or text me right now at 604-800-9593, 604-800-9593. One application, one credit check, and access to Canada's top lenders. Today, I'm going to talk about the complete role of a mortgage broker in Canada. They don't just shop around for best rates. When most Canadians hear the term mortgage broker, they think of someone who simply shops around for better interest rates. While that's not entirely wrong, it's a surface level definition that leaves out the messy and fascinating and often misunderstood reality of how mortgage brokers in Canada operate. If you're considering using one, or even if you've worked with one before, here's what you really need to know. So I've just kind of summarized a few key points. And the first one that I'm going to start with is the broker compensation. And it's broken down as whether the compensation, it's either lender paid or it's client paid. Most Canadians assume that if they work with a broker, there will be fees attached. Now, in reality, the vast majority of mortgage brokers in Canada are paid directly by the lender when a mortgage funds. The commission usually comes in the form of a percentage of the mortgage amount, often around 0.5 to an entire percentage point of the entire funded amount. And that's for a standard 5-year fixed or variable rate mortgage. Importantly, this commission does not come from the mortgage proceeds, but rather from the lender. Okay, so it doesn't get skimmed off the top. It doesn't come out of the customer's pocket. It comes from the lender itself. They've got a huge vault to pay out commissions to mortgage brokers. When does a mortgage broker fee come into play? So I'm talking fee here, not commission. So for conventional mortgages, and these are the, inside the box type of customers who fit with many of the well-known traditional Big 5, Big 6 banks in Canada. There are usually no broker fees at all. The lender who funds the mortgage pays the broker's commission, as I just mentioned. In fact, if a broker even attempted to charge a fee on these circumstances, the repercussions would be serious. Like the lender could impose a lifetime ban on the broker, preventing the broker from ever submitting business to them again. So since brokers rely on access to as many lenders as possible, losing a major lender can be devastating to their business. So if you're dealing with traditional lenders, there should not be any broker fees charged at all. However, when a client is declined by one of these Big 5, Big 6 banks, and there's a lot of outside the Big 5, Big 6 banks, there's tons of what we call monoline lenders, and there's no fees on those as well. But if you get declined by that A business type of lender, then a broker will turn to like an alternative or a private lender. And these are also known as non-conforming mortgages. In these cases, the broker charges a fee, typically 1 to 4% of the mortgage amount, maybe sometimes even higher. And the reason they charge a fee is because these lenders do not pay the broker. So it ends up being the self fee system. The fee is deducted directly from the mortgage proceeds. Okay. Meaning the client ultimately receives less cash than expected and must make up for the shortfall. So there's nothing unethical or that's disallowed about this practice. In fact, this lending channel is in constant demand. It's a very popular lending channel, and most of these mortgages are short term. They're 1 to 2 years. And they carry interest-only payments and are priced anywhere from 3 to 8% higher than the conventional rates that you would receive with a AAA lender. Some other things to be aware of: the compensation varies dramatically, from lender to lender. Some mortgage products like short-term rates, refinance switches, or private lending pay little or nothing at all. While it's true that longer term products like a 5-year fixed generally pay mortgage brokers more than shorter term products like a 2 or 3 year fixed or even a 1 year, That doesn't mean brokers, or you shouldn't assume that the broker selfishly will steer you towards them. In fact, for much of the past decade, the 5-year fixed has often been the smartest and most stable choice for many borrowers. At the end of the day, an experienced broker should and will match you with the product, the term, and the rate that best suits your situation, regardless of what it pays them. Also, to stay on this note here for broker compensation, there are sometimes brokers receive bonus compensation or perks if they fund a certain amount of business with that particular lender. While this can subtly influence which lenders a broker favors, a good broker balances those incentives against what is truly in the client's best interest. So, a broker may get paid a few dollars more on a particular lender, but that lender may also have a promo that is very beneficial to the homeowner. They may provide $1,000 cash back or no fees on the legal or whatnot. So it's often a push and pull kind of arrangement sometimes if you come across these situations. But ultimately, we're guided, mortgage brokers, by the client's demands, and rate is pretty much near the top of it, if not in the top three. So personally, I end up suiting up a client with the ultimate, the mortgage that best suits their complete needs. And interest rates being one of them, and other factors as well that we'll discuss. Now, here's the next point. Do brokers really have access to all the lenders? This is one of the biggest myths, I'll say, that mortgage brokers can shop any bank in Canada for you, because it's not true, and it's rare that you'll find that with any broker of any industry in the market today. The reality is that brokers only have access to the lenders who work with the broker channel, and that is many lenders. It exceeds the list is continuously growing. I think it's fair to say that it's at least 50 lenders that are on that list, and that includes most big banks except a few. And I'll tell you right out, I'll just say the acronyms of the lenders without saying their names, but RBC, CIBC, and BMO don't deal with mortgage brokers. So there you have it. We do not deal with every single lender out there. Those three lenders are a few that we don't deal with. But beyond the banks, brokers can access credit unions, trust companies, monoline lenders, which is another world of elite AAA lenders, and of course private lenders. This is where brokers shine, since these lenders aren't usually available directly to the public. There's lots of lenders out there that the only way you can get mortgaged with them is through a mortgage broker. They don't have a sales force. The actual number of lenders in a broker's toolkit depends on their brokerage and network relationships. So some brokerages may only have access to 2 or 3 or 4 lenders. Other brokerages, as many as 40 plus lenders. So I happen to be in one of those brokerages that do substantial volume. We're the top broker in our network, and we do close to $1 billion in funded volume every year. So we have access to all the key lenders and many other lenders beyond that. Not every lender is equal. Just because a lender is on the list, it doesn't mean that the broker has a strong relationship with them. And sometimes you may have a lender on the list, but has limited products and really challenging guidelines. So they don't end up getting used very often. And the approval is not guaranteed. So if one lender approves a file, it doesn't mean the other will. And the same goes with if one lender declines a file, it doesn't mean that an opposing lender will decline it as well. Which leads to my next point, efficiency. Here's some things that I think, especially for first-time home buyers, very, very good to know. One application, one credit check, and access to Canada's top lenders. So that's the tagline that I use to describe my services, and that's essentially what I'm trying to say here with the efficiency. When you apply through a broker, you only fill out one application and undergo one credit check. From there, the broker can pivot quickly to any lender in their network without redoing the paperwork or harming your credit score with multiple pulls. Now, in saying that harming your credit score, it's another myth. You hear it all the time, are you going to check my credit? There's absolutely nothing wrong with checking your credit, especially through the mortgage broker or through the lender channel, like at a bank. I don't care what anyone tells you. It's a common scare tactic that a broker might use or a banker might use to prevent you from shopping with another lender. If that's so what you desire, then I mean, you can do so. The only caution I would say is if you do have a credit score that's kind of on the edge and on the brink of not being on the minimal baseline to qualify for a mortgage, then yeah, your score might come down by a couple of points and it may impact things. But for the most part, generally speaking, if you have a solid credit score, you should be able to check your score every month if you wanted, and it shouldn't be detrimental. Where I've heard where the greater impact on your credit score is when you, for example, if you're purchasing a vehicle and you are inquiring credit through the dealerships, apparently it's a stronger hit. Also, if you do, credit cards that are offered through TV, radio, or at special events, you get this special credit card promo. Those are also different impact hits to your score. But if you're inquiring for a mortgage with a Schedule A bank or a mortgage broker, you're going to be fine. It's already, I'll say it lightly, considered a soft hit to do so. Next up here, brokers who work around the clock. While not every broker does this, many go far beyond the banking hours. And I, unfortunately, to my wife's demise, am one of those brokers. I take calls, text, emails at night, on weekends, whenever. That's just me, and maybe at this point in my life I do that, but who knows, down the road it could I could mute that or stop it entirely, but no, that's something that could be an advantage with a broker. If you are absolutely a client of a broker, you'll have access to him or her at all times. Another big edge, working around the clock, you're able to submit urgent files on the weekend or on holidays. This is in an industry, we can push lenders to meet transaction deadlines because we understand that time is of the essence when you're writing offers or closing deals. That's real estate. The level of responsiveness can be the make or break factor in a competitive market, especially like Vancouver, Toronto, or Calgary. So this is definitely, if you are busy, you do want a mortgage broker with high responsive service. And that's definitely one thing. Maybe you don't have to ask about it with your broker. Just do it. Shoot him a text or shoot him or her a text on the weekend, or attempt a call, say at 7 o'clock in the evening. Just see what kind of response you get. A broker's workplace environment. So the public image here is that, brokers, we all work in sleek offices, sipping lattes and negotiating on behalf of clients. That could very well happen. You might see that the odd time, but the reality check here is most brokers are independent contractors who work from their home offices. From time to time, they may end up in a coffee shop in between appointments, and some end up with these shared office spaces as well. But you're seeing less of these mortgage brokerages, retail storefront mortgage brokerages, and they're running their shops online, through webinars, Zoom calls, and so on. And that's how the sales team keeps in touch. But for the most part, a lot of mortgage brokers are very mobile, and they've got a really good home office set up with all the technology they need to do to be very efficient. There's not usually to add to the workplace environment. Brokers do not get paid a salary. They don't have a benefits package unless, of course, they subscribe to one and pay a monthly fee for some, benefits. It's basically an eat what you kill type of industry. Just a lot of hustle, especially in the early years. There's no secret the environment can be high stress. Brokers juggle clients, realtors, underwriters, compliance rules, and lenders all at once. That said, many brokers are highly proficient in digital workflow systems, e-signature platforms, and online document collection tools. Skills that often make their processes far more efficient than the workflow systems you'll find at a traditional bank. This one's a huge one. In an industry where speed and accuracy are everything, this tech savviness alone can make a broker invaluable. So, I've experienced this with a lot of my partner realtors where they're encountering some frustration with a client who is not able to reach out to their lender, their banker. And it could be something silly like, oh, he's not working today. He just cut off at 5 o'clock. He's off the clock. And that's, you got to ask yourself if that's a priority for you, because if you're buying a house and there's financing conditions, that should not come into play. You need someone highly responsive, and that's what a mortgage broker will bring to you. How much time is actually spent on your file? This one comes up like never. People never wonder about this, but I thought I'd bring it to light here. Behind the scenes, brokers are, what you'll experience firsthand is we're gathering and verifying documents all the time, right? So we receive your documents, and a lot of things that come into play when that happens. And number one is that we have to analyze those documents, and that takes time right there. Beyond that, we analyze the documents. Some of us code the documents so we can reference them without even opening the attachments, down the road. After that, we input all the details. We pre-calculate the qualification metrics, the gross debt service ratios, the total debt service ratios, your net worth, all that good stuff. We navigate the lender portals at that time. We're viewing various guidelines from the lenders, seeing where you're going to fit. We make calls to the lenders, see if we can get some exceptions on something that might be a little tight. And we negotiate those exceptions directly with the underwriters. And then we manage those closing conditions. This is a part where, you get approved, but people forget you get approved and there's several conditions on that approval. And this is the closing cycle. Here, a lot of drama may happen if communication isn't on point, and if being prompt and fast, on the broker end, isn't on point as well. So a lot of moving parts there, and to spend the time you spend on a file, like, wow, this can go anywhere, this scale, anywhere from, I'd say, maybe accumulated 4 hours. That would be bare minimum, I would think. And I'm talking from pre-approval to when you start with your customer all the way till the closing completion date. 4 hours. I mean, if I can do 4 hours on every file, like, I'd be a billionaire. I think it's more like on the high side, those hours could accumulate as high as 50, 60, 70 hours. It could get insane. It's a lot of time that's spent on a file. So yeah, I don't know if that's confuses things, but yeah, anywhere from 4 to 60, 70 hours could be spent on a file. Not all obviously in one fell swoop, but cumulative with that client throughout the course of the life cycle of that deal. But a well-packaged file is the outcome. That's what happens with all those hours, and it's beneficial when you put in all that time with the broker. They have you on file, and it serves you well in the future. As I'll get up to that point. My next point here: who brokers really work for? Brokers love to say, "I work for you, not the bank." Okay, so that's true in principle, but there's some nuances here for sure. Brokers must act in the client's best interest. That is a given, through our regulatory requirements and all that good stuff. But they're also bound by what the lenders allow as well. So they have to look out for the lender's conditions at the same time. And it's the paycheck usually comes from the lender, not the applicant, unless of course you're proceeding with a non-conforming mortgage, in which case you will incur the fee. So yes, brokers work for you, but they also work with lenders and within the realities of how the industry pays them. So it's kind of an intermediary relationship where we have to represent the best interests of both the broker, the client, and the lender. The lifetime value of a broker client relationship. And this is, I would say, probably the most valuable one of the least discussed, but most powerful aspects of using a broker is that the relationship can last like pretty much forever, like a lifetime. And here's why that matters. Once a broker is established, they own their client relationships. Your file history and preferences are on record. So this is a big thing because most brokers that are in the business are in the business for the long haul. The turnover, like I said, maybe in the first 2 or 3 years of a broker's career, that's where you might experience turnover. But beyond that, if you're a well-seasoned broker with at least 5 years of experience, you're going to have access to that broker essentially for your lifetime. On your second or third mortgage, the process often feels effortless. The broker already knows your financial profile. They know your employment history and your risk tolerance. And over time, the brokers become trusted advisors, not just transaction facilitators, and dare I say it, sometimes friends. Okay, so they understand how your needs evolve from first-time buyer to upsizing, refinancing, investing, and then eventually downsizing. So like a complete life cycle of real estate. And what clients eventually realize, the true value of a broker isn't just in the first deal, but in the continuity of service. A strong broker relationship can feel like having a personal mortgage department on call forever. Okay, so there's a few more points here. I can go on and on. I'm just going to end off with some additional points here. Access to niche solutions. So credit unions, B lenders, and private lenders, these often save the deals that the banks decline. So these are just some niche solutions that you'll find with a mortgage broker as opposed to a banker. And on top of that, there's other concepts and strategies that are offered through the broker channel. For example, how to make make a component of your mortgage tax deductible. How to incorporate a fully functioning checking account within your mortgage to achieve something called interest cancellation, another concept. Also, the ever-growing, the popularity of the chip reverse mortgage, that's another concept type of solution that is growing in big numbers in Canada amongst the baby boomers. So a lot of niche solutions that maybe they don't suit you right now in your life, but down the road, your broker is constantly being trained and certified in these different concepts and solutions. Negotiating leverage, that's a big one. Brokers can sometimes push back on lenders when conditions are unreasonable. Really, the word sometimes, it shouldn't even be in there. That we continuously push back on lenders when conditions are unreasonable. So that's a big thing. And file representation as well. A strong broker knows how to tell your story to a lender in a way that gets you approved. This is critical, this one. If you're on your own, I guess it's no different than representing yourself in, like a lawsuit or something without a lawyer, right? You're kind of throwing yourself out there. On the mortgage side, mortgages are approved based on guidelines. Okay, so there's a series of guidelines, or you can call them rules as well, and you have to fit this criteria to get approved for the mortgage. And sometimes if you are the client and you're directly qualifying through to the lender, you may say too much or too less and not knowing what the guidelines are. So a mortgage broker knows precisely what the guidelines are and will focus your applications around those guidelines. And this greatly enhances your chances of an approval. The bottom line here, mortgage brokers in Canada are not just rate shoppers. Okay, so that's the one big takeaway here. We're independent professionals, and we navigate a complex and often a nonsensical type of industry. It doesn't make sense all the time. And yes, the compensation usually comes from lenders, And no, they don't have access to every bank in Canada. But when you strip away the myths, the value lies in expertise, access, and efficiency, and relationships that can last and span a lifetime. Using a mortgage broker is less about chasing the lowest rate and more about having a trusted partner who can pivot fast, fight for your file, and guide you through the mortgage world for decades to come. Call or text me anytime if you have any mortgage questions at all, especially if you're in British Columbia or Alberta, as I am licensed to service these specific provinces, and especially if you're from Vancouver or Calgary, as I'm very familiar with these markets. Come to me for all your mortgage needs. Call or text me at 604-800-9593, or you can get me on WhatsApp, or just go ahead and link up to my website, homefinancingsolutions.ca, where you'll find my complete catalog of past blogs and podcast episodes. And one more thing, check out my award-winning mortgage app. It's embedded somewhere in the notes or profile section from where you are listening to or viewing this. This thing is amazing. It comes equipped with tons of calculators, market interest rates, and every other thing you can imagine. It even enables you to do a snap pre-qualification on yourself. You got to check it out. Give it a try. Thank you again for tuning into Mortgagenomics Canada. Stay well, everyone. Talk again soon.